Hey guys, Mark Sedlock here with Trade by the Numbers. So in tonight's video, I'm going to cover a couple things. The first thing is I want to walk you through the last 5 months of FX trades with the system. And then I want to talk more about the inside bar, which was referenced in the last video that I posted. So in the last video, I gave you guys the rules for the inside bar, and I actually have some early results from the system using the inside bar, and so I'm just going to walk you guys through that really quickly. So first, what I want to talk about is the cycle of traders. I have a video that I posted a couple weeks ago that goes through the cycle of traders and why this cycle repeats itself. So I'm just going to do a quick kind of summary of that, and then we'll dig into the details. But most traders, when you first start trading, what do? Well, you go to Google, do a Google search, and you arrive at a system or a strategy that you're willing to purchase, or maybe not. Maybe you're not purchasing it, but you start testing it and do your own trading. And from there, what happens is most people try to take a shortcut, and they don't spend the months that are required to really fully learn the system and make sure that that system is objective, and to make sure that it has an edge, meaning that it makes money. And then what happens is you start trading, and quickly you realize you're in trouble. You no longer know where to enter, you don't know where to exit, and suddenly you start losing money, and you lose faith in the system, and you think the system sucks, so you stop trading it, and you move on to another system. So the whole reason I'm bringing this up tonight is if we look at this equity curve, and we're starting with a $5,000 balance, all right? You can see what this system did. It initially started off losing almost 500 bucks. So it immediately started off losing 10%. So if you just start trading, you're immediately down 10%. Ouch, right? Well, it's only 500 bucks, but let's just assume you had a $20,000 account. Well, now you're down $2,000. How are you feeling? Do you feel confident that you want to continue taking trades? All right, now let's move ahead. So we start making money. Now you're feeling really good until you get to this point. And at this point, you actually take, let's see, we're going from 7,500 down to 6,600. So you take a fairly steep hit, and it happens rather quickly. It's kind of a straight line down. Now, what I want you to think about is if you had just started trading at this point right here, and suddenly you're down about 19% on your initial investment. Again, would you keep trading? So what happens is most people are going to say no. They're going to think they're doing something wrong. They're going to be scared to take the next trade, and they're just going to sit on the sidelines or move on to a new system. Where people who have done their homework and know that this is just normal system behavior are going to continue trading here and move on to new equity highs, whereas the person who stops, well, they're still down 19%, and they've moved on to a whole new system. So don't let that be you. There are no shortcuts in trading, just like there are no secrets, guys. There's no secret sauce. There's no holy grail. All you got to do is do your homework, make sure that the system fits your personality, and make sure the system has an edge. All right, now what I want to show you real quickly, let me find it here, see which one it is. It's not that one. Okay, here we go. So this weekend I got the inside bar all coded up, and if you guys want to review what the rules for the inside bar are, please go to last week's video. I don't remember how far in, but you'll find it. It's in there. It gives you all the rules for how I'm calculating the inside bar. So this is over the last 5 years, over the course of, I think there's 10 or 11 pairs in here. And I have quite a few trades, 3,400 trades. All right, so there are basically 3 combinations that work really well with the inside bar. Now, this one right here, I don't think I would do. So if we look at the numbers, you can see that the win percentage is actually really low, but I'm also risking a really small amount of money. So I'm risking $1 to make $10. So I would expect that I have a fairly low win percentage. This one here is going to end up taking some pretty steep drawdowns, so I don't think I would trade it. I'm just going to disregard this one right here, and let's look at these two. What I want you to note is, out of 30, let's see, how many trades again? 3,400 trades, I've actually narrowed it down to about 174 trades. So out of the entire universe of trades that I have available to me, I can easily dwindle this down to the best trades. Why is this important? Well, one, let's look at here is the overall profit on the system over the course of that 5-year period. It's $4,500. So this is assuming that you're trading a $5,000 account. So if we do some quick math and we make $4,500 on $5,000, it's a 90% return. All right, now I realize that's over 5 years, but if we look at the overall return per year, it's an 18% return per year. And this can be completely automated. It's 100% objective. I'm already spitting the signals out. So I don't know about you, but 18% return per year for one specific setup is actually pretty damn good. So what you would do from here, because you're not going to be in the market very often, right? I only have 174 trades for the entire 5-year period. I just need to find a couple other trades that will pile on top of this, and maybe I can get this up to a 30% range. If I can consistently make a 30% return per year, guys, I am knocking it out of the park. There are very few people out there who are able to achieve returns even at this level on a consistent basis. So you have to manage your expectations. When you get emails on marketing that talk about making 200% returns per week, guys, I want you to start thinking about it with kind of a skeptical eye. Think about this. Most of the time when people are emailing you, they're only emailing you about winning trades. And it's almost as if these guys never lose. So you start thinking, they're making 200% returns, what, weekly? Monthly? I mean, if they really were, don't you think that at this point they'd be billionaires and they wouldn't have to email you? Let's be realistic, all right? Let's start thinking in terms of a long-term plan. Can I make 15% return a year? Can I make 20% return a year? And what happens to my money if I can compound it at those rates? So we got to retrain our brains to start thinking realistically. All right, that's all I got. Hope you all have a great week, and I'll catch you all later.